So, let's be real. You've seen the headlines, you've seen the frantic social media posts. The market is on an absolute roller coaster, and it seems like everyone is pointing their finger at one person sitting in the driver's seat. Is one man really capable of crashing the global economy? Or is there something a little more calculated going on behind the scenes? Let's dive in and try to separate the facts from the fear.
And this is exactly what I'm talking about. This headline is practically designed to make your heart pound, to make you want to grab your phone and panic sell everything. It feels so urgent, so real, and that's the point. It's meant to trigger an immediate emotional reaction. But is it the whole story? Not even close.
This is it, right? This is the multi-trillion-dollar question that's probably on your mind, on every investor's mind, right now. But hold on. Before you make any rash decisions, it's absolutely crucial to understand the forces at play here. There are three key things driving all this volatility, and as you're about to see, they all seem to lead back to one person.
Okay, first up, the trade war. Now, this isn't just some political argument. It's the weaponization of trade, with tariffs being used as ammunition. And you know, this is a tool that has a long and frankly often destructive history.
So what even is a tariff? It's really simple. It's just a tax on goods coming into the country. The whole idea is to make foreign products more expensive so that you, the consumer, decide to buy the stuff made right here at home. In theory, it sounds pretty straightforward, right? But in practice, oh boy, in practice, tariffs can unleash a whole cascade of unintended consequences. Let's look at a perfect example from history.
Let's hop in a time machine back to the 1930s. The U.S. passed something called the Smoot-Hawley Act, imposing these huge tariffs for the exact same reason, to protect American industry. And the result? It was an absolute disaster. Other countries immediately hit back with their own tariffs, global trade just ground to a halt, and supply chains completely fell apart. Just think about that for a second. A policy that was designed to protect American jobs ended up making the worst economic crisis in modern history even deeper. It's just a stark reminder of how connected we all are in the global economy.
And this slide just illustrates the problem perfectly. The theory, the dream, is that tariffs will shield local jobs. But the reality is that companies often just pass the cost of those tariffs directly onto you. The prices of everything, from cars to washing machines, just go up. And other countries, they don't just sit back and take it. They form new alliances, they find new partners, and they cut the U.S. out. And all of this creates chaos and uncertainty. And in the world of investing, uncertainty is pure poison. It just paralyzes decision-making and sends markets into a tailspin.
So, the trade war is creating all this economic uncertainty. But that's not the only fire being stoked right now. Let's move on to the second factor, which is all about geopolitical instability. And this leads us to a really fascinating theory about a potential secret plan.
So, the second big driver here is the constant public questioning of NATO. Now, this isn't just about money. NATO has been the bedrock of global security for over 70 years. So by suggesting that the U.S. might not honor its defense commitments, you're essentially shaking the very foundations of the entire post-war order. And that kind of geopolitical earthquake, well, it sends tremors through every single market on the planet.
All this chaos, the trade wars, the geopolitical instability, it all leads to one really provocative question. What if this isn't just random disruption? What if it's all part of a plan? I know, it sounds a bit like a conspiracy theory, right? But honestly, when you look at the potential upside for the U.S. government, the logic becomes surprisingly compelling.
Okay, so stick with me here. This is the four-step theory. First, you create chaos through trade wars and by questioning these long-standing alliances. Second, as you'd expect, the market panics and falls hard. Third, with the economy now teetering on the brink, the Federal Reserve is pressured into cutting interest rates to try and stimulate growth. And this brings us to the ultimate prize in step 4, the chance to refinance the national debt at a massive discount.
And this is why that final step is so unbelievably important. The U.S. national debt is over $36 trillion. To put that into perspective, if you spent $1 million every single day since the pyramids were built, you still wouldn't have spent even $1 trillion. It's a number so vast it's almost meaningless, and the interest payments alone are just staggering.
You know, the best way to think about it is like a massive credit card bill. When you high interest rates, your monthly payments barely even touch the balance. It all goes to interest. But if you can refinance to a lower rate, suddenly you're saving billions, maybe even trillions in interest payments over time. If this theory is true, it's not just some bold economic move, it's a high-stakes gamble with the entire global economy. And it would be one of the most audacious financial maneuvers in history.
So that's the why behind all the chaos. We've got the conventional reasons and, well, the more conspiratorial ones. But honestly, the most important question is, what do you do now? How do you turn this widespread fear into a personal financial advantage?
Okay, the very first thing to do is just take a deep breath and zoom out. Market downturns are not glitches in the system. They are the system. Markets move in cycles. They always have, and they always will. What goes down eventually comes back up. The real key is to not get shaken out of the game during the down cycle.
This chart right here illustrates the emotional trap that catches so many investors. At the peak of a bull market, when all the headlines are euphoric, greed kicks in, and people pile their money in right at the very top. Then, when the market turns and panic fills the air, fear takes over, and they sell everything at the bottom, locking in these devastating losses. The ability to control your emotions and act rationally when everyone else is panicking, that is what separates successful investors from the rest of the herd.
So, instead of reacting with fear, let's prepare with a plan, right? Fortune favors the prepared, not the panicked. So, how do you actually prepare for the rebound? Well, it all comes down to 3 key steps. Let's break them down. Step 1 is all about playing defense. Before you even think about buying stocks on sale, you have to make sure your own financial house is in order. That means having a cash reserve, 3 to 6 months of living expenses, just sitting there. It means attacking and getting rid of high-interest debt like credit cards, which are just an anchor on your finances. Think of it like building your own financial fortress. Once it's secure, then you can venture out into the world of investing with confidence because you know your basic needs are covered no matter what the market does.
Step 2 is discipline. This means resisting that primal urge to sell when everyone is screaming, "Get out." And even more than that, it means you have to continue to invest. This is where a strategy like dollar-cost averaging really shines. By investing a fixed amount of money at regular intervals, you automatically buy more shares when prices are low and fewer when they're high. It's a system that forces you to buy low and takes emotion completely out of the equation. It turns a frightening downturn into a mathematical advantage.
And finally, step 3 is diversification. I mean, it's the oldest rule in the book for a reason. Don't put all your eggs in one basket. A well-diversified portfolio is your absolute best defense against volatility. Each of these asset classes plays a different role. Stocks give you growth potential. Bonds give you stability and income. They're like a cushion. Real estate can be a hedge against inflation, and things like precious metals can act as a safe haven in times of extreme crisis. The whole goal is to build an all-weather portfolio that can survive and even thrive in any storm.
And this just captures the entire strategic shift you need to make. This is the mindset of legendary investors like Warren Buffett. They get genuinely excited when markets are down because they know it's a rare chance to buy great companies and quality assets at a steep discount. It's a fundamental shift in how you see things, from seeing a market crash as a threat to seeing it as the single greatest opportunity to build long-term wealth. So, as we wrap this up, just remember this one thing. The market will recover. History is crystal clear on that point. The only real question is, where will you be when it does? Will you be on the sidelines regretting that you panic sold and watching the recovery from afar? Or will you be in the game, having built an even stronger position during the chaos, ready to ride that next wave up? The choice is yours.